Hello traders, Black Dollar Ambrose speaking. This is our second video. I want to show you something here on EU, how I handled EU last week. So, beginning on the monthly time frame, I went and saw that the past 3 months the market was bullish, and there was something that was trying to hold price, because you can see here price was held and also price is trying to react on that point. Then I went and saw that we had a break of structure, so that we had a break of structure on the monthly. Then we had some imbalance, because if you have to see there's some space in between here, the space, then the candlestick that is above is what I will call a supply, but there's an imbalance. So though it is not that strong, but it is something that is holding price. Because remember, this is the monthly time frame and it is something that has been holding price for long. So price is being held at that level. And on a quarterly basis, we can see that for the past, you can see that the structure has shifted to the downside on the monthly time frame, because you can see we have a break of structure here to the downside. So now price needs to rebalance something before it can shoot. Price needs to rebalance something. This is just some generation of liquidity, but price needs to be rebalanced before it can drop to the downside. So that is what I saw on the monthly. We dive down to the weekly time frame. Monthly is just for the directional buyers. We dive into the weekly time frame. What do I see on the weekly time frame? On the weekly time frame, I see that the market, I can see that the market in the past 3 weeks, I saw consecutive bullish candles for the past 2 to 3 weeks here, consecutive bullish candles, and what I would be anticipating for more bullish moves to the upside. So majorly these higher time frames, the monthly, the weeklies, they're just for directional buyers. What do you see? Where do you expect the price to go to? And all those sort of things. Not for real, not not where you begin your analysis from, unless maybe you're a position trader, which I guess is only the banks that are position traders, the city banks. But for us, we are day traders. We are day traders. Some people are scalpers, day traders, swing traders. Yeah. So we can see that there's a pattern. There's a pattern that the market is trying to follow. So the market is kinda in an uptrend. So we go to the daily time frame. What do I see on the daily time frame? I want to see whether the previous day's liquidity has been taken. By the way, you also have to consider the fundamental bit plus also the sentimental bit. You add on to your technicals. So we see, let me see the previous days. Daily, on a daily time frame, normally I want to see the previous day's highs and lows, whether it was cleared. So this is the previous day's high. Market has just cleared it. The previous day's low. So I guess the market is now coming for the previous day's low, since it has cleared the previous day's high, because there's liquidity resting above here. So we need the liquidity. Since the liquidity above has been taken, we need the liquidity below to also be taken. This is just trying to generate a directional bias. But the real actual analysis, I begin it from the daily time frame, since I'm a day trader. So on the monthly, weekly, and daily, that is what I have. So let me begin my real analysis. I begin on the H4 time frame. on the H4 time frame. So basically, I want to analyze from the 16th, Monday 16th September. Monday 16th September. Where is it? 16th. So this is what we have on. So here you can see that we have a market structure shift to the downside. We see we have this to the downside. Having had this to the downside, there's a tool I like so much. It's called a Fibonacci tool. I remove it and pull it from the high. Since it's a downtrend, I pull it from high until the lowest point here. This is the lowest point as per this time. So when I put it like this, I look for the premium pricing. My 50% is the premium pricing. This is the premium pricing. So let me remove it. So whenever I identify my premium pricing, I look for points of interest that are above, because I see here we have an imbalance here. Then there was a candlestick that was above, making it a supply zone, and it is what held price to the downside. There's also another point of interest that we see imbalances. These are institutional candles. This rapid bullish candle, this is what we call a displacement. So I have this level. So this level is a left order. This level was the unmitigated zone, but the market went and mitigated it. The market went and mitigated it, then dropped to the downside, leaving a level that is above. So this is a level that I call a left order. It was being left, but the market has to fill it. So let us play price. Let us play price. Price goes and taps. Price goes and taps on our level that is above. So having tapped on our level that is above, we need a shift. Like I said, we need something to shift like this, liquidity to be taken. Then we make a market structure shift. Then we can drop to the downside, having tapped our point of interest. So you can see the market already tapped our left order. Our left order, the market tapped on it. Remember, before tapping on it, it generated some trend line liquidity where trend line traders are entering. So there's a lot of liquidity that is above. Liquidity drives the market. So let me go to the minute 15. I see that shift on minute 15. So this is the market. This is it. The market has tapped. So the market went and tapped our point of interest. Remember, like I told you, I needed something. I needed a higher low. Then I needed a higher high. Then I needed this higher low to fail. Then we drop to the downside. This is what we call a shift. It confirms that the level that is on the higher time frame, the H4, is a strong level. So we can see the very thing printed here, because we see we have a high. We see the market tapped. Then this level failed to hold, because you can see this one closed below it like this. The market generated some liquidity, then went back to our points of interest. So now we need it to drop. So let's mark that break of structure. Let me enlarge it. So this is it. This is the break of structure. You can see the candlestick body closure. This one, the candlestick body closure below. So when it closes below, we mark our points of interest that is above. Remember, we have a foundation from the higher time frame. So I have this imbalance. Then I have this candlestick that is here. I have this candlestick. have this candlestick. This is liquidity. Liquidity drives the market. These are inducement, engineered liquidity, in fact. So this is an inducement. Whenever you see an inducement, it is a good trade. This is an inducement trying to induce us. So this is the shift. We got on the H4 time frame. We went and got a shift on the minute 15. Now we want an entry on the minute 1. So let's see how we would have gotten this entry. We would have gotten this entry. So when price tapped on this point of interest of ours on the minute 15, we go to the minute 1. Reason being, I need tight stop losses. I need tight stop losses. 3 pips, 5 pips. That my stop loss is 3 pips to 5 pips above the structure. I need tight stop losses. So when I need also the I need the same I need the same thing that I looked for on the minute 15, also on the minute 1. I need this shift to happen. Then I will enter on the retracement, on the mitigation. So we can see the shift happened. We see the market tapped on our point of interest here. This is a higher low, higher high, then this, then but this failed to hold. Having failed to hold like this, it broke to the downside. We got some retracement. Then the market started dropping. So that was the entry for that setup. That was the entry for that setup. Let's go to minute 15. That was the entry for that. So would have gotten a trade for that. Let us remember we also have a minor break of structure. This, even though this was something we call, even though it was liquidity, but we have it also broke structure. So anything can happen on it. It can mean to hold price for some time, not for a long period of time. So you can see it is trying to hold price. So we see that level held price, but we had gotten an entry. And remember, all you need is a 1 to 3 risk to reward. It's all you need. And from here to here, it was more than a 1 to 3 risk to reward. So you can see the market dropped entirely until down. See how it is very efficient to use a market confirmation and shift and all those things. And remember, we also have a zone here. We have this demand zone also here. We have the one that is above also, because we have an imbalance. We have a lot of imbalances here. We have a lot of imbalances. So that is why that market is trying to hold price at that level. We see play price. So that level also held price. But remember from here to here, it was more than enough for us. So price here has broken structure again to the upside. Remember we trade what we see but not what we think. Price is trying to communicate something, so we have a break of structure. We have a break of structure here. So having had a break of structure, let's play price. So having had a break of structure, we pull out our Fibonacci tool, put it from down here until up. We identify our discounted zones, which is here. This is our discounted zone, so we remove that. Then we mark our points of interest. That is here we have, because you can see an imbalance. Then we also have an extreme point of interest. We also have extreme points of interest here. So now we have 2 points of interest. So now on these points of interest, we just need on a lower time frame, our entry time frame, we just need a shift. We just need a confirmation. We need a confirmation of that, either up or below, because all of them they're at premium pricing. So let us play price. My network is disturbing me today. Network is on and off. So let us play price, play price. Aha, so it has reached. It has now reached. So let me dive down to minute 1. I see whether we have a confirmation. There's no confirmation yet. So we need, if we are to buy, we need this to be broken. We need that level to be broken. The level wasn't broken. So now again, we need this level to be broken if we are to buy. Because we can see we have low, lower high, lower low, lower high, lower low. So we need something to fail for us to buy. So let's play price. Time is not on our side. Play price. We need our levels to be broken. So we need this one to be broken if we are to buy. Remember, price is at our point of interest. This is how price normally plays. It hasn't yet confirmed, but it is at our point of interest. Go to minute 15, time is up. So price is at our point of interest. We need it to confirm before we can buy. So let's check on the 1 minute. I'm sure it has confirmed. You can see this level was now finally broken. This level, it was finally broken with this candlestick move to the upside. So let's play price. Now you're seeing how our price is plain. So this is it, this is it, this is it. So this is how we get our entries. So basically that was for EU. Thank you. I'm going to make a third video after this. That will be on GU. I'll make a third video after this on GU. Thank you.